How's the जोश? हाय तो सुनाई नहीं दे रहा है. आई कैन सी बहुत सारे लोग ऐसे स्लीपी स्लीपी हो गए हैं. गाइस, एनर्जी. हाउ इज द जोश? सुनाई नहीं दिया. और एक बार, हाउ इज द जोश?
कल्चरल होने वाला है यार. इसके बाद इतनी कम एनर्जी में काम नहीं चलने वाला. थोड़ा एनर्जी बढ़ाओ.
नमस्कार, जय जगन्नाथ. A very energetic evening to everyone present here. I'm Sanjana.
And I'm Shashikant. We are delighted to have all of you with us as we begin what promises to be an insightful and enriching session filled with knowledge, innovation, and thought-provoking discussions.
Now, I would like to welcome the session speaker, CA Swapnabrata Das sir, to the dais, and accompanying him, the student presenters, Ms. Shikha Gandhi, Mr. Vineet Patel, and Ms. Nikita Swain. Audience, give a huge round of applause. Guys, huge round of applause, please.
So, ladies and gentlemen, if you think this session is just going to be about regular paper presentations, you are still not ready for what's coming next. Our session speaker today is an absolute powerhouse. He doesn't just know numbers, he understands the entire ecosystem of finance, law, and corporate strategy.
Absolutely, Shashi. We are talking about a seasoned professional with over 23 years of rich experience. He is a fellow member of ICAI and IBBI registered valuer and hold degrees in economics, business administration, and even in masters in journalism and mass communication. Now, I would like the volunteer Soumya Vishoi to present a sampling and memento to CA Swapnabrata Das sir. Give a huge round of applause, guys. I would request Y. Rohan Karthik to give a sapling and memento to Ms. Shikha Gandhi. Guys, तालियां. I would request CH Kunal Patra to give a sampling and memento to Mr. Vineet Patel. I'd request Sovan Patra to give a sapling and memento to Ms. Nikita Swain.
जोरदार तालियां guys.
We shall now move forward with the paper presentation session of audit and assurance. Our first paper presentation, Ms. Shikha Gandhi, a CA final student from Vadodara, Gujarat. She has served as Secretary of Vikasa Vadodara for the year 25-26, during which the branch has received a certificate of appreciation for the best branch performance at the WIRC Awards. Today, she will present her research paper titled Decoding NFRA Orders, What Went Wrong and How to Get It Right. Please welcome Ms. Shikha Gandhi with a huge round of applause.
So once again, this message is for all the student speakers. You'll get 12 minutes. First 10 minutes, after the completion of first 10 minutes, we'll press a buzzer once, and at the end of 12 minutes, That's it. Okay? All the very best.
Samastanku Mora Namaskar. Good evening, everyone. Well, they say numbers never lie, and rightly so. But as we'll see today, the people auditing them sometimes do. I am Shikha Gandhi, a CA final student from Vadodara, Gujarat. My paper is titled Decoding NAFRA Orders, What Went Wrong and How to Get It Right. And trust me, by the end of these 12 minutes, you will never look at a bank statement the same way again. So let us start with the regulator that suddenly everyone is very afraid of, NAFRA, the National Financial Reporting Authority. Set up under Section 132 of the Companies Act 2013, NAFRA is India's independent audit watchdog. It can act suo motu, which is Latin for we don't need your permission. Before NAFRA, audit regulations in India were handled by the ICAI itself. But after the Satyam scandal and other disasters, the parliament decided that having auditors regulate auditors is a bit like asking your cat to guard your fish tank. Adorable in theory, catastrophic in practice. NAFRA changed that. It has passed enforcement orders which have proven that audit failures now carry very real and very expensive consequences. Now let's dig deeper into the topic with the help of two landmark case studies. Case study number 1, the parent company of CCD, Coffee Day Enterprises Limited. Look at this structure. At the top sits CDEL. Below it are 7 subsidiary companies, and at the bottom MACEL, which is Mysore Amalgamated Coffee Estate Limited, a promoter-controlled entity, 91.75% owned by the father of Mr. V.G. Siddhartha, who was CDEL's very own chairman. Here's the plot twist. Rupees 3,535 crores was systematically diverted through these 7 subsidiary companies to MACEL under the name of loans and advances and buried in the audited financial statements. The barista didn't just spill the coffee. He redirected the entire supply chain. And the auditors, Messrs. BSR and Associates affiliated with KPMG, missed it entirely. Now, let's look at the red flags on this slide because they weren't exactly hiding. Red flag number 1, rupees 2,226 crores of loans were given to MACEL. No business rationale verified. The auditors accepted a net worth certificate of Mr. V.G. Siddhartha, except Mr. V.G. Siddhartha had no direct ownership in MACEL. That is like verifying whether your tenant will pay the rent by asking the neighbor how rich he looks. Red flag number 2, the subsidiaries used uncashed checks to reduce the outstanding balance of loans in their books from rupees 2,549 crores to rupees 842 crores. No impairment assessment carried out, just acceptance of management's explanations. Red flag number 3, rupees 394 crores of advances supposedly for coffee purchases, while the actual annual coffee purchase just 70.90 crores. That is a 5.6 times of anomaly. If someone orders for 1 cup of coffee but pays for 6, you don't call that generosity. You call it fraud risk and you test it. And red flag number 4, these loans were interest-free, repayable on demand and with no supporting agreements. Classic related party abuse. Every single signal was screaming, but the auditors heard nothing. And it gets worse, because here we can see 2 separate failures happening simultaneously. On one hand, evergreening. Rupees 1,706 crores in loans were understated through structured circular fund flows. Look at this table. Same-day receipts from MACEL, same-day payments to MACEL. Perfectly matching amounts. The audit file itself recorded that we have obtained and reviewed the bank reconciliation statements. They reviewed it, they just didn't read it. Like a barista who stares at spilled espresso and calls it latte art. Bank reconciliations were even flagged internally and still not actually tested. And on the other hand, documentation lapses. The firm's audit tool allowed work papers to be modified after the report was signed off with no mandatory re-sign-off. 68 Excel files were edited after NAFRA asked for the audit files. 5 work papers from the standalone file and 10 from the consolidated file were created after the report date. The engagement partner resigned from the firm just 4 days after signing the audit report and surrendered his certificate of practice. SA 230 and SQC 1 both violated. A lot of red flags, I must say. Now, let's switch the channels. Case study number 2, Zee Entertainment Enterprises Limited. One of India's biggest media conglomerates, they are in the business of telling stories. Unfortunately, the auditors helped them tell a very misleading one. Here's the plot. Zee Limited held rupees 200 crores of fixed deposit with Yes Bank. The chairman of Zee Limited, who is also the promoter of the SL Group, without anyone's approval, issued a comfort letter in September 2019 pledging this FD as collateral for promoter group loans. Yes Bank in July 2019 appropriated this FD and wiped it out entirely to settle loans of 7 promoter group companies. No board resolution, no audit committee nod, no shareholder vote. The chairman essentially used the company's money as his personal guarantee facility. And the auditors, Deloitte Haskins and Sells, were the ones watching this show. So what exactly did Deloitte miss? This slide tells us in 3 painful columns. Number 1, evidence not pursued. The Yes Bank reply dated October 2019 clearly stated that the FD was closed based on the chairman's letter. The audit team had this document and yet they did not press for full corroboration. The evidence was right there like a spoiler written in the title and they still didn't catch the twist. Number 2, management challenge missing. When the management explained away the FD transaction, the auditors accepted it. No corroboration demanded, no contrary evidence tested. That, ladies and gentlemen, is not professional skepticism. That is being a background extra in someone else's fraud film. And third, compliance failures. Section 188 related party violations, Ind AS 24 disclosure failures, and Section 143 subsection 12, the mandatory fraud reporting obligation, completely ignored despite clear indicators. The show had all the signs of a bad ending, and yet the auditors gave it a clean chit. And here's where NAFRA said, enough. It imposed the following penalties. For the audit of CDEL, Messrs. BSR and Associates charged with 10 crores of penalty, the engagement partner with 50 lakhs of penalty and 10 years of debarment, and the EQCR with 25 lakhs of penalty and 5 years of debarment. For the audit of Zee Limited, Deloitte Haskins and Sells charged with 2 crores of penalty, the engagement partner with 10 lakhs of penalty and 5 years of debarment, and the EQCR with 5 lakhs of penalty and 3 years of debarment. These are not warnings. These are careers that ended and firms that got fined for failures that, as we just saw, were entirely preventable. The price of ignoring red flags is no longer just professional embarrassment. It is everything. Now, if we place the 2 cases next to each other, this comparison table tells a striking story. Across every single dimension, fraud detection, professional skepticism, related parties, compliance, EQCR, both firms failed. Different companies, different industries, different auditors, but the same mistakes. And this is the moment where I want you all to think about something beyond accounting. We have all seen that relationship where someone ignores all the warning signs, the inconsistent stories, the unexplained gaps, the trust me it's fine, and the friends are screaming, can you not see what's happening? Ignoring red flags in a relationship does not make the problem go away. It only makes you complicit in the ending. NAFRA is that friend who showed up with the receipts and said, we told you so. Both audit teams saw the signals and both chose comfort over courage. Now, 6 lessons from this slide, and I want each one to stick. 1, professional skepticism is not a slogan. It must change behavior. What you ask, what you accept, and what you refuse to sign off on. 2, bank replies and bank statements are core evidence and not just routine paperwork. Read them like they contain the answer, because often they do. 3, related party transactions must be assessed for business substance and not just disclosed. 4, Section 143 subsection 12 cannot be ignored where fraud indicators exist. I wasn't sure is not a defense NAFRA will ever accept. 5, EQCR is an independent safeguard and not a rubber stamp. When the EQCR simply agrees, both partners lose their license together. And 6, audit documentation must be contemporaneous and tamper-proof. So what does getting it right actually look like? 3 actions and a mindset. First, challenge the management. Demand corroboration, trace approvals, test contradictory evidence before accepting any explanation. Management's word is a starting point, not a conclusion. 2, follow the money. Read the bank trail, match same-day flows. Ask, does this transaction make any business sense? If it doesn't, dig deeper. And 3rd, document properly. Clear work paper ownership, timestamps, review notes. Every red flag either escalated or resolved. Nothing should be left floating. And the mindset? Identify the risk, design response, escalate the issue, and report honestly. That's it. That is the entire job. As CA students standing at the threshold of this profession, we have a choice. We can be the auditor who proved comfortable conclusions from weak evidence, or we can be the auditor who pauses, questions, and has the courage to say, this does not add up, let us find out why. Because substance over form, evidence over assumption, and courage over convenience. Thank you so much for being an amazing audience. It has been a pleasure to present my paper here today.
Thank you, Shikha, for your insightful presentation and valuable contribution. Your research and perspective were truly appreciated.
Now, representing Ahmedabad, our next presenter is Mr. Vineet Patel. He has represented his branch at the regional level pitch deck competition under NTS on multiple occasions and was honored with the Best Paper Presenter award at the Ramnath CA Student Conference in Gandhidham. Today, he will present his research paper titled Audit Evidence Beyond the Ledgers, Minutes, Emails, and Management Discussions. Please welcome Mr. Vineet Patel with a huge round of applause.
Hello, hello, hello. Hello. So why? Anything which I start researching on starts with the simple question why. And today's my topic is audit evidence beyond the ledgers, emails, minutes, and management discussions. But why there was a need for such a topic, that audit evidence beyond the ledgers? That means that while auditing the ledgers, while going through the financial statements, there was something missing out in a traditional audit system. Was there something that which was clearly not shown while auditing? Well, let's start to understand with the practical examples and case studies where it was concluded that there was a requirement to go beyond the ledgers, to go beyond something which was far more hiding between that numbers, between those ledgers. So 7th of January 2009, one of the India's largest IT industry company of that time has a founder named Ramalingu Raju, who told that they have manipulated the accounts, books of accounts of that company, not for 1 year, not for 2 years, but for 6 freaking years. Just think for a moment, how could any company can manipulate the books of accounts, and that too for 6 years? Definitely, there were n number of questions which were coming in my mind when I went through this research paper. First of all, the first question was that, was there any auditors there who has done audit? If there was an auditor, how could that traditional audit system could not detect the manipulation of accounts? Second thing was that why the audit evidences which were beyond the ledgers, which could actually have exposed this scam far more before, was not gone through. And third, what were the key aspects and what were the key insights which we can learn as just any future chartered accountants like you and me. So when I started researching, when I started try to find out what was the issue in this Satyam computer scam. So let's start it with a very basic example. So it was established in 1987 in a city of Hyderabad. In a city of Hyderabad where in late 1990s and early 2000s, there was a boom in an industry, there was a boom in an IT industries, because of which even Satyam computers started booming. It started rapidly expanding, and because of that, the investors gained trust and all the stakeholders of the company started believing in it. And just like that, it started exporting its services to 60 different countries and the hundreds of clients all over the world. And at that point of time, Satyam Computers became one of the largest IT company of the India. Well, it became the largest IT company of the India, but now they were facing the another problem, and the problem was that its share prices were increasing, and with that, even expectations of investors were also increasing. So in order to keep the pace with the expectations of all the investors, they need to do two things. Either they should go with the expectations of investors and try to achieve that much revenue, which was not the case possible for them because the market conditions were not in their favor. And the second option was just tell the reality that we are up to this much revenue, let the market correct its value of the company. But Ramalingam Raju was not ready to let the share prices of the market fall. So what he did was that he found a third option. And the third option was that inflating the revenue of the company, which was definitely not a moral idea, but yet he chose that option. And by inflating the revenue of the company, what he subsequently did was park the debtors into the balance sheet of the company. The debtors which were fake, the debtors which were fictitious. And in order to now clear that debtors from the balance sheets of the company, now he has to also book the fake receipts which were actually not received by the debtors because the debtors itself was not existing at all. So now he recorded the fake receipts into the company. And ultimately, these led to one of the biggest decisions which they have to face. And just like that, whenever the share market prices were increasing, the expectations were increasing, and the way and more expectations were increasing, the more and more revenue was inflated of the company. And after that, in 2008, they came to a point, they came to a situation where more than 5,000 crores of fake cash, fictitious cash was there in a balance sheet of the company. And they didn't know what to do with that. Yet, Ramalingam Raju tried to take another decision with the board members, which was not so favorable for the company. What he tried to achieve was that invest in his own related party concerns. There were two different concerns. First of all was a Maita's infrastructure and a Maita's project. If you look closely at the name, it is a reverse of Satyam. They were the group entities only. So the moment they took this decision to invest in the related party concerns, investors started protesting against these, as the Satyam Computers were IT company, and why would IT company invest in any infrastructure company? And that single point of time, everybody, let it be a stakeholders, let it be a government, let it be a investigators, everybody's eyes, the Satyam Computers was the first case. And then the investigation started for Satyam Computers. And these investigation led to the multiple results with the multiple evidences. And most of the evidences which were found that were not related to ledgers, that were beyond the ledgers. Let me give you an example. What they did was that they scanned multiple emails, thousands and lakhs of emails which were gone through the company. Now in that all the emails, they found one simple pattern, and the pattern was that each and every, and the most of the emails were feeling like, it was like a pressure cooker. And how exactly? Because in order to reach the revenue which was the expectation of investors, they need to achieve at least the bare minimum target. And in order to achieve that target, they just has two options. Either you just go with the market conditions, which was not at that point of time, it wasn't possible to gain that much revenue. So the another option was that, as everybody was knowing, that inflating the revenue. And that's how the emails became the main evidence which was beyond the ledger. Apart from that, there was a minutes and there was also a management discussions. At the point of time when Ramalingam Raju discussed with their board members about this decision of investing into their own group entities, each and every board member accepted that. And that tells us one different thing. One other thing, that it proved that the board members were also with him already. So this was the one example of India in which Satyam Computers was revealed, which was exposed, and ultimately the reason was not just a typical audit evidence. What generally, traditionally, what we do is we just go through the financial statements, and from that we just do a sampling. And from a sampling, we will decide that this much, and this much part is invoices we will be checking out. We will also ask for the bank statements. We will ask for what was the balance of bank on a 31st March. But here is the fact. Here is the hack. The Satyam Computers fabricated everything. So if an auditor is asking for a bank statement, they will give a bank statement which was not totally fair and correct. So in that case, auditor's reasonable assurance was totally correct. But what was missing was going beyond that audit evidence. What was missing was going beyond that financial statements. Because if they would have gone beyond that financial statement, they would have found out that there were n number of things which were going on in the company. The second one is Wells Fargo. This is the company which is based in the United States of America. This company is a banking company, and in this company also there was a top management which was pressurizing its lower management and executive teams to achieve its target by anyhow, let whatever happens. And when investigations ultimately started, when everybody started doubting on its impressive growth rate, if you would have been the auditor of this company back then in 2010, you would have given them a standing ovation that, oh man, what a company, what its financial statement looks like, because everything was completely perfect and legitimate, which everything was ideal to what it should be. And let's move towards the third company. And the third company is Toshiba. Toshiba is also one of the Japan-based company which has faced the legal consequence just because of the evidences which were beyond the audit, beyond the ledgers. And now, if I sum up both the company's evidences, then I would like to tell that the minutes of the meeting and the management discussions which was found, which was beyond the ledgers, were something like that. Audit committees and the compliance committees tried to give the warning bells n number of times with the different conclusions, but what we as an auditor sometimes missed out was couldn't able to figure out that thing. And the last thing is the post Satyam reaction. So like if there is any scam, if there is something missing, if there is a gap between the what should have been done and what is being done right now, definitely there should be some provisions from a government also, right? That what are the things what government tried to do after such scams existed in the market. So this was the Indian revolution which government tried to bring. So they did a multiple, they came forward with the multiple solutions with the multiple provisions, such as the Companies Act, SFIO, NFRS, Section 245, etc., etc. And these are some of the different examples of different governments what they have done. But at the end of the day, like although after trying n number of things, although after trying and implementing n number of provisions, what matters is an integrity. You can tell company to have the meeting. You can tell the company to provide these n number of things, and company would give that. But does that mean that company will go with the integrity? Because at the end of the day, integrity and the honesty is something which does not come with the regulation. So at last, I would like to tell you that whatever we have done in all the companies, or whatever you have seen through all the companies, one thing which mattered and one thing what company does was the basis of the one single thing, and that was the lakshya of their respective founders. Thank you.
Thank you, Vineet, for such a well-researched and engaging presentation. We sincerely appreciate your efforts and insights.
Our next presenter is Ms. Nikita Swain. She has a strong interest in auditing, taxation, and professional development and continuously seeks opportunities to enhance both her professional and personal growth. Today, she will be presenting her paper titled From Trial Balance to Audit Report, a walkthrough of statutory audit. Please join me in welcoming Ms. Nikita Swain onto the stage.
So, here the countdown begins. 3, 2, 1. 3 levels, foundation, intermediate and finals. Two letters, C and A, or question. How many of us have looked at a trial balance and thought everything matches, right? So the work is done. Well, an auditor is paid to be suspicious of exactly that. A very good evening to the distinguished guests, faculty members, and my fellow participants, and all the future chartered accountants in the house. I am Nikita, and I'm delighted to take you on a fascinating journey from trial balance to audit report, a walkthrough of statutory audit report. We will see how auditors transform number of transactions into an independent opinion on which investors, regulators, and stakeholders rely upon. As chartered accountants, we just don't verify figures or numbers. We build trust. So, let's step into the shoes of an auditor and see what exactly goes behind the scenes of a statutory audit. So, before discussing the process, let us understand why audit exists. Let me ask you a simple question. Imagine you are investing your very hard-earned money in a company of which financial statements are prepared by the management itself. Would you be able to trust it? Would you? Absolutely not. That is where audit comes into play. Auditor first understands the business, its financial controls, and its industry before providing his opinion. This also acts as a deterrent against fraud and financial manipulation. Let me ask you another question. What if you were given to examine your own exam papers? How much would you guys think you would give yourselves? 100, right? Not less than 100 would anybody expect. That is where examiners exist. Simply where management prepares the report card and auditors examine whether these marks are genuine or not. Then, after assessing the risk, we can finally move forward to understanding the entity and its operation. Let me ask you a question again. Would doctor prescribe a treatment without diagnosis? Certainly not. That is absolutely where auditors first understand the business and its operation and its industry to provide his opinion. Then, next we identify where the material misstatements are most likely to occur. Then we determine materiality, the error which can be significant to the board of members. This planning stage helps auditor to understand and focus on which areas it should be focused more and which areas it should be focused less. Remember, auditing is not just about checking every single transaction. It is about checking the right transaction and right thing. Next, after identifying the risk, auditor evaluates internal controls. Take internal controls as a security lock of a company. If the lock is stronger, then the risk of theft reduces. Similarly, auditor first evaluates internal controls. understand whether it is properly designed or not, or whether it actually works or not. Let me give an example. If a company's policy requires purchase order above rupees 5 lakh to be approved by an authorized signatory, we will see whether this compliance is being followed or not. Let me ask another question. I know you might be asking whether I am asking so many questions, but let me ask, what is easier, checking all the purchase orders or checking whether a reliable approval process exists? Which option, guys? First one or the second one? Yes, the second one option saves time and efficiency both. Stronger controls helps auditor to focus and have a great reliance on the system. After assessing the risk and testing effectiveness of internal controls, auditor now examine how to address this risk. These risks are addressed on the basis of two key points. First, the level of risk, and how strong the controls are. Next, let me ask one last question. If the risk of material misstatement is low and the controls are stronger, which procedure do you think might be applicable for that? Any guesses? Well, here analytical procedure might be enough to solve the query, as analytical procedure helps in comparing trends, ratios, year-on-year movements, and also helps in whether we have to perform extensive testing procedures or not. Next, if the risk of material misstatement is high and the internal controls are weaker, there we apply which procedures? Any guesses? Substantive audit procedures. Substantive audit procedures are direct tests of transaction and documents. These are the key objective of auditor to perform so that it can be able to get the evidence that are sufficient and appropriate to support the conclusion. For example, vouching entries, sales entries to accounts and statements, obtaining confirmation from banks and debtors, recalculation of depreciation, income tax provision, and interest. Take substantive procedures as auditor's key detective work. We are here not just to accept the explanation from the management, rather we are here to gather proof. Next, after testing all the internal controls, substantive procedures, and risk assessment, let's step into the most important and significant part of a company, that is inventory. Inventory being the most significant part, let me ask another question. Can inventory be in the books but not on the shelves? Can it happen? And the answer is unfortunately yes. The auditors then identify whether the inventory are there in the company or not. It values with applicable Ind AS 2 and recognize the inventory in the correct accounting period or not. Then we follow the provision for recording the accounting of the inventory, which is cost or net realizable value, whichever is lower. Let me ask, there might be tons and tons of inventory in the warehouse, but they might look valuable in the books, but they might not be in the real life. That is why it is auditor's responsibility to ensure that financial statements reflect correct entries and economic reality rather than just mere accounting entries. Then we have the revenue recognition part. As you all can see, then we have a revenue recognition part. It is the most sensitive part because it directly impacts the profit. For example, if in a construction company, the revenue is recognized on the basis of completion stage of a work done, and if in that case any mistake is done, the revenue might be recorded highly, or it can be recorded in a lower manner. That is why it is considered the most important part, as it can inflate the financial statements of a company. As we reach the finish line, we observe that auditor performs various final procedures. That is, we observe that it assesses subsequent reviews and it assesses going concern assumption, it performs analytical procedures and various other procedures to support its conclusion, and it performs various other procedures to obtain sufficient and appropriate audit evidence to support its conclusion. For example, if a major customer goes bankrupt, then this message must be conveyed to financial user or not. Whether this message should be conveyed to the financial users or not. Yes, absolutely yes. That is why financial statements should reflect every true picture of the organization going on, because auditors are the key detectives who will tell that what is exactly going on the insides of the organization. Then we come to the conclusion part, as it gives a final audit report after all the risk assessment procedures, testing, internal controls, substantive procedure. We come to the final part, which is auditor's voice. It is unqualified opinion that presents that financial statements are true and fair. Second, qualified opinion that signifies material misstatement but with simple concerns, and adverse opinion which states that there are many material misstatements. And lastly, the disclaimer that shows that audit evidence could not be obtained. Let me give you it as a movie review. Some say it is excellent, some say good with few concerns, some say not recommend at all, you should not watch this movie. Then as we conclude for the final part, I would like to leave you with 3 key messages. That is, first, auditing is risk-based. Second, substantive procedures, internal controls creates assurance. Third, audit report is not just a mere document, it is the story of an organization. These principles might be a little theoretical, but when it goes and reflect in the real corporate world, there might be few cases, corporate fraud cases, which is shown by that, and it gives a timeless lesson to us that auditing's work is not limited to ticking boxes, checking whether this has been done or not. It is about gathering knowledge and what exactly is going on in the insides of the organization. As we discussed, the current surrounding picture of Rajesh Exports shows that and gives us with one professional question. Could deeper risk assessment, more professional skepticism, stronger analytical procedures have helped us in identifying the fraud way earlier? And that leaves us with one final question, whether in future if similar corporate fraud cases appear, would our substantive procedures, statutory audit procedures be enough to uncover it and detect it? Thank you. And thank you for being a wonderful audience. Jai Jagannath.
Thank you, Nikita, for your excellent presentation and for sharing your valuable understanding of the statutory audit process with us.
And now we arrive at one of the most anticipated segments of this session. With his deep wisdom in finance, auditing, and corporate governance, his words are bound to spark new perspectives in our minds. Please join us in extending a massive and warm welcome to our distinguished session speaker, CA Swapna Brata Das, sir.
Sir, we request you to kindly take the stage and address the gathering.
Please give a huge round of applause, guys.
The 3 speakers, students who presented. One is, and I noted down in between what they were presenting and what was the expectations from my side at least. Shikha Gandhi, Vadodara, but why Binit Patel, Gujarat? That initially astonished me, If she is from Vadodara, then why you are from Gujarat? You are representing the state and she is representing a city. And again, our own Nikita Swai from Bhubaneswar, Odisha. I don't know why, but still, it is still in my mind why Beneath did not give his real city. It is a audit problem, or what is it? Okay, no issue. Now, so far as audit is concerned, let me first focus on the topic of today's session. It was basically related to NFRA observations. The first thing first, NFRA observations. And how we chartered accountants, or you, the future chartered accountants, are missing the line. That was the first thing. Second thing is that how to go beyond the audit. So when I say beyond the audit, it necessarily means beyond documentation, beyond the traditional approach of auditing, and looking into other aspects to find out what are the missing lines in the audit. That is the reason why slowly and steadily another authority like National Financial Reporting Authority is taking over all these things. So I was expecting that all of you will focus on that. So far as my observation is concerned, it is my independent observation. Shikha Gandhi has gone little bit modern. I wish she had observed the deficiencies identified by NFRA and give some solutions. Then Binit Patel was quietly focused on one case, that was Satyam. And Nikita was giving a lecture or study note on auditing rather than the solutions. Don't mind it. What I identified that I am representing independently without any biased view. Now the question is, what is audit? If you ask me what is audit, in audit A stands for awareness or A stands for assurance. So when I say A stands for assurance or A stands for awareness, and when I say awareness, it needs competitive technical knowledge, audit. U stands for universal applications. Whatever audit tools you are using, they must have some universal applications. What have already been identified or utilized, those must be used for a better audit technique. D stands for dedication. When you are making audit, you must be completely focused on audit rather than bookkeeping and other things. Only focus should be on audit. So D stands for dedication. I stands for integrity. I stands for independence. I stands for intelligence. So there is another institute. I am confused. Some students in the 12th level or graduation level, they came, we do not want to do CA, we want to do a course in AICA. So what is this AICA? I was quite confused, but now I am thinking AICA means Artificially Intelligent Chartered Accountant. Now the new revolution will start, whether you want to be artificially intelligent chartered accountant or you want to be organic chartered accountant. There is a difference. This debate I am keeping. Similarly, artificial intelligence, when we are talking about artificial intelligence, basically most of the people talk about what has already been identified and what are being discussed, what is there already. But what I think, see things as they were never before and ask, why not? जैसे कि nowadays we are making most of the transactions through Paytm, through UPI, and most of the mails go through our mobiles. We know that traditionally there was a concept of phone tapping. Mind it is going to happen, mobile tapping. This is the next generation intelligence all governments worldwide are going to use. It has already been started and it is going to be used. Why I am focusing it? Just imagine I am sending a mail through my Gmail. I am transacting through PhonePe. I am transacting through net banking through my mobile. I am sending messages. I am chatting with different people through my mobiles. And there is a secret artificial intelligence implemented by a government or any intelligence agency, and it will find out my motive of working or my motive of action. You just imagine what I am focusing. What will happen? What I have done in my financials, that is not important. What is my intention, that is going to be important. This is going to be the next generation artificial intelligence, that is mind mapping. That is mind mapping. And all audits are going to be done through mind mapping. When one chartered accountant or one auditor will be assigned with audit assignments, he has to use mind mapping technologies or mind mapping intelligence to identify what has been done in the financial statements rather than what was the intention of the promoters, board of directors, or management of the company. So it is very, very important, the next generation artificial intelligence. Yesterday I was going through an article whereby Russia and China jointly working on how human beings can survive up to 150 years. See the thinking, why China is a $20 trillion economy and we are still struggling to become $4 trillion economy. See how they are thinking for the future. So people see things as they are and ask why. We should dream things as they were never before and ask why not. You have to be intelligent enough to identify what additional or innovative tools that we can use to identify the audit laggings. Just management representation, audit engagement letters are not enough, point one. Point two, again I will tell you, when we get the audit engagement letter or management representation letter, just taking the representation that it is the responsibility of the management to prepare the financial statement and auditor's responsibility is just to give an opinion on that, that is not enough. We have to give an hypothetical view on the financial statements. We have to give an hypothetical view. So you have to go. So I will conclude it within 5 minutes because we are already going out of time. But what I want to brief it out, the traditionals will be there, but modern technologies should be adopted, and simultaneously we should think of the next generation artificial intelligence that we can use to track all these things. Otherwise, just like NFRA, they are thinking about Indian Institute of Accounting. So we have to be serious enough to think of the technologies, the new generation technologies, and the next generation technologies. So far as traditionals is concerned, all auditors have fundamental principles. What I next say, that is OICAI, Office of Institute of Chartered Accountants of India. But for me, for auditor, O is objectivity, I is integrity, C is confidentiality, A is awareness or competitiveness, and I is independence. These are the 5 characters that should not be avoided. These should be the mantras in every chartered accountant and student of chartered accountants. These are the 5 fundamental principles for any chartered accountant before making the audit. Point 1. Second, a chartered accountant, ICA, matlab internal control assessment, should be your tools. The first and foremost thing every chartered accountant should keep in his mind is internal control assessment. And internal control assessment needs competence in ICS. Matlab, not company secretary, it is compliance and substantive procedures. So we should build knowledge on compliance procedures to minimize the risk, to assess the risk and to minimize the risk to minimize the vulnerabilities associated with business transactions, and if required, we should use our own intelligence in addition to artificial intelligence to make an analytical analysis. I am just giving an example of how you can make an analytical analysis, analytical procedure, how you can apply analytical procedure in auditing techniques. Just see, we make the audit as the statutory auditor either quarterly or annually. If it is a listed company, who are the persons who are making the audit of the company, listed companies basically, on daily basis, on regularly basis? You know, identify, these are the investors. These are the shareholders. So can you ever imagine to go into the stock market or capital market and how there is a daily movement of the stock price for the last 365 days for which you are being entrusted with audit? No auditor is going to that. For me, at least, 99% of auditors are not going to that. But you will ask me, sir, what is the benefit of looking into the movement of the share price for last 365 days? Because they are the investors. They have put their hard-earned money in the market. And most importantly, every day they are going to the press release, they are going to the newspaper, they are going to all the internal informations available, and they try to find out whether there is any lapse of management. So within those last 365 days, if you make a chart and if you find out there is a sudden fall in the price and there is a sudden rise in the price, there are two possibilities. Either there is a information which is leaked, or there is some sort of insider trading going on within the company, or there are some informations in the market which is routine but which are going beyond our knowledge. Then the auditor has to go into those days where there is unusual changes in the market price in the capital market, and he has to find out, और उसको identify करना पड़ेगा कि why there are changes and reasons of changes and what precautions the auditor should take to combat those situations. So the topic is very good topic, going beyond the traditional auditing, looking into the observations identified by the NFRA and identifying new tools for making the audit. Finally, I will conclude, because this is a topic where we can discuss for hours, but finally I will conclude with one chant of Srimad Bhagavad Gita, Traigunya Visa Veda Nastrigunya Bhavarjuna Nidvanda Nitya Satvasta Nirjoga Kshyamatmavan. इसका मतलब क्या है? It is applicable to our Vedic thoughts. Traigunya Visaya Veda Nastrigunya Bhavarjuna. That means go beyond the three material natures and think what you can do next. That means go beyond those traditional tools, go beyond these modern tools or newly developed tools, and identify what you can do or what better you can bring for auditing for the future. Thank you for all your patience hearings. I think you will utilize and will develop. Thank you.
Thank you, sir, for your enlightening address and for sharing your highly valuable insights with all of us. Your guidance has undoubtedly enriched this session and will remain an absolute source of inspiration for every aspiring chartered accountant present in this room.
Thank you all for your enthusiastic participation and support. Thank you.